Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Peakstone Realty Trust Annual Report. Peakstone Realty Trust is a real estate investment trust that has made a strategic shift to focus on the industrial sector. As part of this transition, the company is divesting its office properties and increasing its exposure to industrial outdoor storage, IOS. The company's portfolio consists of 94 properties, which are divided into two segments, industrial and office. The industrial segment includes operating properties that generate revenue through various business activities. On the other hand, the office segment comprises properties that are being redeveloped or repositioned for future use. Peakstone Realty Trust is actively reshaping its portfolio to concentrate on the industrial sector, which is expected to drive growth in the company. The list of businesses and services provided by Peakstone Realty Trust includes industrial outdoor storage, IOS, property management redevelopment, and repositioning of office properties. However, it's worth noting that the company is primarily focused on the industrial sector, with a smaller portion of its portfolio dedicated to office properties. Peakstone Realty Trust market capitalization of $1 billion is materially smaller than most of its industry peers of roughly $2 billion. Peakstone Realty Trust trades at a higher price-to-book ratio of 1.04 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 42% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has increased, while revenue and shareholder equity are declining. This indicates that management has not yet proven the business model is sustainable. This makes the investment case highly unfavorable. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The net income of the company experienced a significant decline between two periods, decreasing from $13,816 to $3,748. This represents a drop of $10,068 in net income. On the other hand, profit margins showed an improvement, rising from 7.1% to 5.4%. The decrease in net income can be attributed to various factors such as increased expenses or reduced revenue. In contrast, the increase in profit margins suggests that the company has managed to maintain its pricing power despite the decline in net income. This indicates a shift towards prioritizing profitability over absolute revenue growth. The company's financial health has shown significant improvement over the past year. A notable change is the decrease in debt level, which has dropped from $1,213,812 in 2024 to $347,263 in 2025. This reduction of approximately $874.4 million in outstanding debt balance is a substantial achievement for the company. Furthermore, the interest expenses have also decreased, reflecting the lower debt burden. The interest expense declined from $15,916 in 2024 to $12,287 in 2025, representing a decrease of 23%. This reduction in interest expenses will likely contribute to improved profitability and financial stability for the company. Overall, these changes indicate a positive trend in the company's financial performance. Management is emphasizing a long-term approach for the company, with a significant portion of employee compensation tied to equity awards that vest over time. This indicates a commitment to sustained growth and performance. In terms of strategy, the company plans to reposition its portfolio by selling off certain assets to generate capital for debt reduction and new investments. External growth through acquisitions is also a key component of the company's strategy, with a focus on acquiring high-quality outdoor storage assets. Management aims to reduce leverage and strengthen the balance sheet through targeted debt reduction efforts. Overall, management is positioning the company for long-term success by prioritizing strategic portfolio repositioning, external growth, and financial discipline. The company's financial activities have been documented in various sections of its reports. One notable aspect is its dividend payment history. According to the records, the company has indeed paid dividends, as indicated by references on pages 26, 27, and 40. However, there is limited information regarding share buybacks. While the use of restricted stock units, RSUs, and equity awards on page 27 suggests some form of share-based compensation, it does not explicitly confirm any share repurchases. That concludes the financial summary for Peakstone Realty Trust. Feel free to comment below, and I will be happy to answer them when possible.